Okay, yeah. Nigerian Breweries. So they just released their H1 results. So at the time of recording, we have analyzed this in our X pages. Hold on. Okay, Nigerian Breweries. Sorry, I will sorted it out. So if you look at their revenue for half year 2026, revenue grew by 8.9%. Profit before tax grew by 18%, 18.2%. Then profit after tax grew by 5.1%. So ideally, profits revenue sometimes need to. There's a reason why this profit before tax is outgrew revenue growth. So whenever you see something, know that there is something that has happened in the midline, not the upline, not the bottom line, but the midline. Something unusual has happened. So let's segue into it, starting with let's look at their books, current price chart, balance sheet, which we have analyzed, income statement, balance sheet, and and free cash flow. Cash flow statement, which can always download any of these. Then you read up more, read what happened, what we found out, evidence backing our findings, and finally what to watch going forward. So that is where you go on X. Like we normally say, this analysis come out earlier on X than on YouTube. So we indulge you to always follow us on X, turn up notifications so that whenever we break this analysis, you can get a hang of it. So let's start with the price charts. So this is the price of Nigerian Brewery. So you can see that it toppled the highest high it has had at a time was in 2017 when it was trading over 140. Then you see what price has done over time, sub 20 naira. This had a current high of over 100 naira, then it dropped back now, trading over 70 naira per share as at the time of this recording. So you can see what price has done, so that you also know that there is always a good time to be in the market. There's a time, not even when you are averaging in what we call buying. Not every dip, not every, because it's a great company doesn't mean that valuations are always right. The market is not a perfect playing ground. There's always a mismatch, even though there is this theory that we call efficient market hypothesis. But no, it doesn't work. The market is not perfect because it's human decision drives the market. So that is where there's always pockets of gaps in the market. So that is where skills analysis comes in. That is why we have professionals. So you can jump in and start doing whatever you say every month. You are buying 1,000, 100, it may be, without having a defined investment framework, and which covers so much. So that is why analysis like ours help you, and that is why we do this for you. So let's go to the balance sheet, income statement. Sorry, if you look at the up line, you see that revenue grew. Look at the middle line, operating profit also grew. Then if you look at the bottom line side of things too, you can see that it also grew. Pay attention to this tax. We are coming to that. Then if you look at the margins, you can see that the margins kicked up. The gross margin went up too. Operating margin dropped a little bit. Then the net margin also dropped, but interest coverage ratio, so there is more liquidity now. So interest coverage ratio fully seated very well. Then tax also went up. So the headwind. Then EPS side of things grew. We are coming. Then look at the balance sheet side of things. You can see that assets also grew. Look at the equities too. You can see that the equities side of things also grew. Then if you look at the ratios, keep on getting better, even though it's still slightly sub 1% for the current ratio, which shows how quick you can cover your obligation. Quick ratio to stripping out all those inventory and stuff like that. Still strength, but slightly. Then equity to the asset side of things grew, liability side of things debt-free. So it is lowered, so they are debt-free. We're coming to that. Then return on assets eked up a bit. Then return on equity was the one that dropped a little bit, so we're coming to that. Then finally, on this side, you see the free cash flow. Let's see what it looks like. So for the free cash flow, it moved from a negative free cash flow now to a positive free cash flow of over 880.7 billion as against the negative of 23.9 billion in 25. So let's dive in. So of course free cash flow improved. Then the revenue is mixed. This revenue you are seeing is actually mixed, and there are many drivers driving it. So the gross margin, like we said, increased and even outpaced the revenue growth because of raw material cost dropped drastically. The cost of raw material dropped dramatically. Then this operating profit you are seeing, that's profit before tax, that grew this much, was supported more from a trading income. Like they fixed, not from core business, but trading some of the free money they had, they made money from it by buying into financial assets. Most of the time, what these guys buy is asset like treasuries and short-term securities just to earn those interests. So, which is still somehow good, but there is still some school of thought that challenges a kind of you are not an investor, you are not a bank, you are not a trading bank. Your work is to expand. But there is another school of thought that says, okay, if there is no opportunity, macro-wise, if the economy is strained, cool. Instead of taking so much risk, you can pile in those money into short-term securities and earn this thing. So that is why you see, so they earn bulk of this profit before tax from financial assets. Then another thing to watch is that their OPEX, which is the operating expenses, is eating away the gains they actually booked in the raw material. Raw material dropped, but the operating expenses like your salary, stuff like that, is eating in. Another thing which we aren't comfortable about is a business of this size did not give detail in their geography sales. Yes, of course, we know you sell in Nigeria, but give detail, guys. You did not also tell us the segments. Give detail, guys. So that's one thing we aren't comfortable with. So then there was no dividend, interim dividend. Another thing to watch is that their related party, which is Henneken, the fee, loyalty fees and technical service fees they paid to their related party, which is Henneken, jumped up to 11.3% from 19.69 billion to now 21.88 billion. Then CapEx, which is capital expenditure commitment, fell from 85 billion it used to be at 54, which we can also link it back to now the bulk of money they loaded into financial assets. Maybe there is no appetite for risk. Then there is also small change in ownership and goodwill dropping. So that is it about Nigerian Brewery. So you can read up more. You can read up more here on this analysis here. Also check our pin message, because we don't want to make these things long. So see you on the next one, please.